So there's been a really cool development in the investment space that I think is going to change the game for UK investors, and especially those looking to start investing for the first time. Last week, Barclays removed their monthly customer fee, in other words, their platform charges for self-directed investors. So this is huge news for a few reasons. Up to now, practically all established institutions and mainstream banks charged a platform fee, but this move finally puts them on par with the likes of Trading212 and may even see them outperform in some areas. Furthermore, research shows that low fees and charges are the single most important factor when choosing an investment service among UK investors, and half of cash-only savers admit they would much rather invest through their own high street bank than use a specialist investment platform. And up to now, you had to make a really frustrating compromise, and it was almost as if people were being penalised for wanting to stick with a known trusted brand and having to therefore pay more, which often meant that people would just end up deferring the decision to invest altogether, or there wouldn't be enough content on those platforms to make people feel comfortable and confident. And as a financial coach, this would break my heart to see, because I know that time is your greatest advantage when it comes to investing. The longer you are invested for, the more you can benefit from compounding, and the difference is also often much bigger than people realise. So starting at age 30 with £500 per month, by 60 you would have ended up with £850,000. But wait until you're 40 to start investing, and the results dropped to just 320,000, all because you delayed while your investments would have otherwise been making you £480,000 extra in passive returns just for starting sooner. So here's what the change in fees means. It means that Barclays Direct Investing customers can start investing from £50 per month into an investment ISA or general investment account online and through the Barclays app. The old 0.25% customer charge is completely gone, abolished, eradicated, saving someone with £50,000 invested £125 a year, which can of course mean thousands of pounds saved in the long run. And if you had £20,000 in an ISA, previously you were paying £50 every year, and now that is going to cost you exactly £0. So in terms of fees to buy and sell investments, and also their foreign exchange fees, those will be remaining the same. But at the end of the video, I will break down exactly how you can set up your investments so that these are £0. And how does this compare to Trading212? Well, Trading212 is a fintech and stock brokerage that was founded in 2004. I have personally more than £40,000 on the platform, so I do know it quite well. The key difference between Barclays and Trading212 comes down not only to their background and reputation, but also the types of investments that they offer. So while Trading212 has more individual investment choices overall, with around 13,000 global stocks and ETFs, Barclays has a wider variety of asset classes with roughly 8,000 investment options that span entirely different categories like traditional index funds, bonds, and gilts. And if we take an illustrative example investment, then for someone wanting to buy shares in a global fund covering thousands of companies across the world, the exact same result is now attainable through both platforms without any difference in fees. For example, you could choose from any of these funds that I compared in my most recent video and just pay the ongoing charge with no extra fees for doing so through Barclays. And one important caveat to mention here while we're talking about the fees on the Barclays platform is that they do still have dealing fees for ad hoc investing into ETFs specifically. So if you want an ETF, you can do so for free, but you will have to set this up as a direct debit, which also means that your purchase dates will be fixed. And this is totally fine if you want to regularly invest into your portfolio. Otherwise, you'd end up paying £6 each time you buy. But when it comes to traditional index funds, the fees are zero, regardless of how often you are investing, meaning these might be ideal if you're planning for a one-off lump sum investment. You may even be able to save a little bit on top by choosing traditional funds that aren't available on Trading 212 and also aren't subject to bid-offer spread, which is the stock exchange makers' sort of cut that they take out. And in all honesty, that additional saving on the spread is probably not going to be a lot, but it is just one of those hidden, baked-in costs to investing that you actually don't hear many people talking about. Is it safe to have my investments in the same place as my savings? I also just wanted to bring up the FSCS protection rules because I know that safety net factors in to people's decision making. The main thing to know is that your cash deposits and your investments are covered by separate safety nets under the Financial Services Compensation Scheme. That is, as of 2026, up to 120k for cash and an additional 85k for investments per person per banking license. Therefore, it's no less safe to have them under the same roof, so to speak, unless you exceed these amounts. What are my thoughts on this update and the future? While Barclays may not keep their fees at 0% forever, I still think this represents a fantastic opportunity for people who are uncertain about trusting other platforms and want to start their own self-managed investment portfolio. The best part is that Barclays does not charge any exit fees. So if their fees do change a few years down the line, you can then at that point decide to transfer your portfolio to another provider without any penalties. And taking that first step is always the hardest part of investing, which is exactly why I focus so heavily on helping people to get started. If you are looking at all of these options and feeling a little overwhelmed about how to structure your own portfolio, please do remember that you do not have to figure it out alone. I offer one-to-one support through my financial coaching program, where we work together to strip away the jargon and build a personalized plan that fits your exact goals. You can head over to my website to book a free introductory call, and we can chat about how to get you moving in the right direction. Thanks so much for watching, and I will see you in the next video.